Hey everybody, Smart Silver Stacker here. Welcome to a live stream. It's been a while since we've done one of these. Do me a favor, give me just a one or say hello in the chat there. If you can hear me loud and clear, make sure the audio is working here. And we've got a lot to talk about today because as you can see here, looking at the markets, we're looking at a lot of red. There's a lot of talk about a market crash incoming. There's a lot of uncertainty right now. Now, are the markets being set up for the biggest crash of all time here? Well, valuations are rich, but I don't think anybody can say that for sure. However, one thing that we do know and we do have some certainty about is that if there is a crash in the markets, that there is going to be a huge response, and that response will have major implications for gold and silver. So let's delve into what we're seeing here. As you can see, this is the S&P 500 index. Had a big drop on Friday, another one yesterday, and then today it really plunged. I mean, markets are off the lows of the day, but we're looking at a lot of red. The biggest decline thus far in 2025. And silver isn't getting out of this one unscathed. You can see the silver market down about 2.8% right now. Eric in the chat says he just bought some silver. Yeah, well, I'm thinking about it. This is, I think, perhaps a good time to start looking at some opportunities to start nibbling at this. Of course, if there is a market crash, though, gold and silver are likely to crash along with everything else. I mean, we've talked about that for a while. A pan sell-off is kind of the one thing I think right now that could derail the gold and silver bull market that we've been watching. Look at gold. Gold is down back under $2,900. Yesterday, we had a record high close above $2,950. First time ever that gold has closed that high. But today we're down almost 2%. That's a pretty big move for gold. Now, what's driving this? Well, the news today that seems to be the catalyst for this decline is that U.S. consumer confidence is crashing and inflation expectations are on the rise. And certainly there's a lot of reasons for consumers to believe that inflation will be heading higher in the months and years to come. So in February, consumer confidence, the index slid to 98.3. That was down from a 103 expected number. It was at 105.3 in January, and this is the biggest drop since August of 2021. Also, 12-month inflation expectations rose to 6% in February. And, you know, very likely that's a 6%, maybe a CPI expectation, but we know that the real rate of inflation continues to persist far higher than we are being told. By the way, if you do want to start nibbling at some silver, make sure you check out SD Bullion's deals page right now. I mean, sentiment in the retail sector remains very low, and you can see that reflected in the low premiums on a variety of physical gold and silver products. But junk silver right now, 79 cents over spot. Plus, silver's down almost 3% today. So probably a good time if you've been thinking about stacking. Not financial advice, but, you know, maybe start nibbling here at some of these deals, because certainly there's no guarantee that there is a crash. This could just be a modest correction. And either way, even if we do get a crash, there's going to be a lot of money printed. Talk about that in just a moment, what that means for gold and silver. If you do want to get into some stacking, by the way, and you know you're a new stacker, you don't want to make costly mistakes. How can you avoid that? Well, you could read the Smart Stacker's Guide to Avoiding Costly Silver Bullion Mistakes. It's a practical guide for stackers to avoid getting ripped off, written by yours truly. It's about a 5-page report. You could probably read this in 5-10 minutes, and it could save you a lot of money. We go over some of the biggest mistakes you can make when you're stacking gold and silver. If you want to get a copy of this, it's free. Just sign up for my free e-newsletter with the link down in the description. You'll get a copy of this attached to your welcome email. It's a PDF, definitely worth checking out. Now, one interesting thing that I think we should take note of here, following the events of this morning with this major decline in stock market indexes, is this, the CME FedWatch tool. Now, this is the expectations for December of 2025, where rates are going to wind up. And you'll notice that these numbers here, 325 to 350, 350 to 375, that would represent a cut, or 3 cuts or 4 cuts, respectively from today's levels. 4 25 basis point rate cuts to get us to this range here, 325 to 350, or 3 25 basis point rate cuts to get us to this range. The expectations of those levels in December are both up significantly just over the past day, and even more significantly over the past month. So 1 month ago, investors were pricing in a 16.1% chance of 25 basis point rate cuts. Now 27.6% anticipation of that. And it's an even bigger change in the expectation of 4 rate cuts. That's up from 4.8% to 12.8% chance of 4 rate cuts this year. Now, why is that? Well, it's because if stocks crash, then the Fed and this current president, Donald Trump, he's told us he wants lower rates. They're definitely going to be slashing rates. There's almost no doubt in my mind, even if the possibility of inflation rises, they're going to stimulate. Now, is that the right thing to do? Probably not, but that's what's going to happen. And you can see that reflected here as well in the 10-year yield. This is the year-to-date chart of that. You can see that's down significantly today. Again, because they are going to cut rates dramatically if there is a stock market crash. I mean, we don't need to really speculate about that much. You can just look at the Fed balance sheet over the past 2 decades. Excuse me. And every time there's a financial crisis, 2008, they buy a bunch of debt, they print a huge amount of money, they stimulate the economy. Throughout the rest of that decade, they're printing money. Now, they tried to taper their balance sheet, kind of like what they're doing now, but in 2019, markets started to break, had to stimulate again. Then you had the COVID crisis, conveniently, to bail out the economy there. They were able to print almost $4 trillion over the course of just a couple years. Now, also, in 2023, when the banks started to fail, they printed a bunch of money through that bank term funding program. You remember that, the BTFP? Now, they've been tapering. They're down to 6.7 trillion. They still got a long way to go before any kind of, pre-2008 financial crisis normalization is achieved. But once again, we are facing an economic crisis here. And it's one that really, once you go down this road of QE, you're committed to just doubling down on this policy every so often when the financial system starts to show the signs of cracks. Now, they've already started talking about stimulus. You've got Donald Trump and Elon Musk floating this idea of $5,000 DOGE stimulus checks. Now, what this is, the DOGE, the Department of Government Efficiency, they say if we are able to hit our targets, then we'll be able to pass some of those, quote unquote savings, the reduction of the deficit back to the American people through these $5,000 stimulus checks. This was originally floated actually by James Fishback, CEO and co-founder of Azoria Partners on X. And Donald Trump and Musk have said, they're considering the idea. Now, they've started already, we're about a month into this presidency, floating this idea of potential stimulus checks. Now, anybody could have seen this coming, I think. Trump, he's a populist guy. He signed his name to the first round of stimulus checks back during the COVID crisis. Free money, quote unquote free, is always a very popular thing. So this is the sort of thing he would get behind. And when he starts talking about things, clearly he delivers on them. You can say what you will about the guy, but he, makes things happen in a big way. And it wouldn't surprise me if, we get some kind of an economic downturn, if that means that these stimulus checks and more are all but guaranteed. And really, I think that the plan now, DOGE aside and their cuttings to government bureaucracy and spending, I don't think it's going to be enough. I think they realize that to get out of $36.5 trillion in debt, you can't pay it off. So how do you take care of it? Well, you make it go away via inflation, and certainly giving out $5,000 to, all the tax-paying households. I don't know if everybody's going to get one, but I think the idea is that taxpayers will get one of these stimulus checks. That's another $500 billion. There's about 100 million tax-paying households in the U.S. or taxpayers, individual taxpayers. $5,000 to each one of them. $500 billion. You start talking about sending $500 billion out after you've saved thus far, according to this DOGE clock, $135 billion. And that's not they've saved that money, really. It's just that they've eliminated it from the deficit. So this is not like money that you're saving in your pocket and you have for a rainy day. No, we're still broke. We're $36.5 trillion in the hole. They're just saying, well, if we manage to cut spending sufficiently, we will distribute some money to the peasantry to keep them in line. I mean, that's the idea, right? It's bread and circuses. That's what stimulus checks always are, but it works. They're very popular. I don't think anybody's complaining about the free money they got during COVID. And yet, unfortunately, the most expensive stuff you're ever going to get is the stuff that the government gives you for free. And so I think the plan here is clearly just to say, to hell with inflation, just print the money, distribute it, keep people happy, and we'll make the debt disappear via inflation, because you can't pay off a debt like we have in the existing currency. But if you debase it massively, then 36 trillion, not such a problem, right? You can pay off any amount of fiat debt as long as you just print the money up and you have the central bank buy the debt, and then you have the cash. I mean, the Treasury can issue $36.5 trillion in new debt and just have the Fed buy it at 0% interest for a term of 100 years, and bada bing, bada boom, national debt is resolved, right? No more problem. The problem is that the currency will lose its purchasing power, and it also will threaten the status of the dollar around the world as the world reserve currency. But that is why on any dips in gold and silver, and certainly if they crash, there's going to be a huge opportunity for stackers to get metal at a discount. I mean, remember during the COVID crash, if we switch this to, let's say, a monthly chart of silver, back in 2020, you see this huge spike down right here. Silver was under 12 bucks during the 2020 crash. And then you saw what happened. I mean, today we're over 30, even with silver being down today. So, that was a huge opportunity. If we get another massive systemic crash, I would say that will be a real buying opportunity in gold and silver, because we know the playbook. We know the response. It's going to be to print huge amounts of fiat currency, and that means that inflation is going to soar, and you're going to want to have physical, tangible assets. In fact, with silver, again, look at the premiums, very low. I mean, we can go to the DOGE Deals page here, and this is not like an excessive plug for SD Bullion, but they've just got low premiums on a lot of stuff right now, especially in gold, but variety of silver products as well. 79 cents over spot for silver rounds. So, what's going on here is that consumer sentiment is in the hole for the metals. It's institutional buyers, industrial users, and central banks that have been buying up gold. Not central banks in the case of silver, that would be institutions and industrial users, but it's a big money that has been driving the bull market in the metals. But if you start distributing $5,000 checks to consumers, and look, you're going to get a lot more than $5,000 if the economy collapses. It just might not buy you much. There, I believe, will be a huge retail surge in demand for precious metals, and consumers will suddenly have a bunch of cash, a bunch of liquidity. I mean, right now, part of why they're not buying bullion is they don't have any money to do it with. But silver, especially, will really take off if that plays out, because, as I mentioned, it's mostly institutions, central banks that are driving gold up. There are some industrial users, I think, who are buying silver, but really what silver needs is retail demand to pick up. It's very low right now. The fact that silver has risen as much as it has, despite the low retail investor sentiment, I think is a testament to how strong the bull market is going to become when retail actually gets into things. But stimulus checks will likely be a catalyst to drive the price of silver much higher. So let me know what you think in the comments down below. Don't forget to sign up for the free newsletter, everybody. Please do me a favor. Smash the like button if you haven't yet. Subscribe to the channel and share this video with your friends, because, as stocks start to look in the red and look a little precipitous, there's going to be a lot of people who panic. A lot of those people don't have any hard assets, and spreading the word about precious metals and hard assets and real money, I think, is going to be very important as the economy continues to devolve. towards a massive crash, even if we're not there yet. Anyway, leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker